can let the attendees join now. Okay. Let's give it 2 more minutes to see if we can get more attendees. Okay, so let's just start. Hello, everyone. Welcome and thank you for coming to join us today in this online webinar, Payment Innovations in Post-COVID Era. My name is Osita Egon. I am Regional Director and Business Development Manager at LATOKUN. LATOKUN is a digital assets trading and crowdfunding platform. We connect entrepreneurs and startups to retail and institutional investors, allowing tokenization of asset-backed securities, in other words, tokenization of real-world assets. I'm pleased to be your moderator for this event. Today, we'll be touching on accelerating collaboration and transforming the payments landscape. And our key focus points today are emerging technologies, biometric payments, peer-to-peer payments, data privacy, banking APIs, and insurtech. And just so you will know, this is going to be a 90 minutes discussion, panel discussion. After that, we will have a 30 minutes Q&A session where we will give the audience the opportunity to ask questions live directly to any of the speakers. And one more thing I want to inform you about is the host of this event, Finnovation World, is organizing a live online pitch competition where a group of up to 30 startups will compete to pitch live online. The top 5 winners will be selected by the judges to pitch and present their ideas live. Okay, and this event is happening on the 10th of July, which is 2 days from now. So you should look out for the invitation email. And so we have very interesting speakers joining us today who will be sharing their views and insights on the topics we have today. But before we dive in, I would like them to introduce themselves. So please, the speakers, if you can introduce yourself, starting from OLLIE WALSH.
Hi, thank you, Osita. So I'm OLLIE WALSH. I'm the co-founder and CEO of Pipit. We are an international cash transaction platform, and we work with migrants to help them support their families at home cheaper and safer.
Awesome. And James?
All right, nice to meet you all. I'm James MURITU. I'm based in Nairobi, Kenya. I'm the CIO of a company that goes by the name of Atlas Finance Group. We also refer to as Atlas MARWA Digital, but we are transitioning to the new name, which is Asante Finance. So we are an offshoot from the Atlas MARWA Group, although it's a totally different entity, just concentrating on the fintech space.
Okay, thanks, James. And John?
So my name is John. I'm the co-founder of Nestmetric. So what we do, we help finance banks, telecommunication, retain their customers using data science and artificial intelligence. Yeah.
Okay, and Manoj?
Good afternoon, everyone. My name is Manoj Jain. I'm the Chief Marketing Officer of a US-based company called Panamax. We specialize in the software for telecom operators, banks, FIs, and aggregators. We have presence across 16 countries, okay, and we provide a full-blown digital financial solutions, including blockchain and crypto wallets to our customers. Thank you.
Thanks. And MARWA. MARWA, can you hear me? Hello, MARWA. Okay, I think MARWA is still having issues with his mic. So let's just move on with today's event, and then we'll let him introduce himself when his mic is finally working. And so, James, I would like to talk to you. I would like you to talk to us on peer-to-peer payment systems. The recent global pandemic, COVID-19, has accelerated the need for consumers to be less reliant on cash as more and more people across the globe try to join the effort in curbing the spread of the virus. And consumers are now trying to peer-to-peer payment systems and are doing transactions on that. And however, to be honest, I just cannot imagine or make sense of what is happening in Zimbabwe if you have watched the news, where the state is putting a stop to all the mobile payment systems. But I would like you to talk to us on what are the observed alternative payment models during this global pandemic, and how are these products helping to meet the current consumers' need?
All right, thank you very much. Yeah, Corona has been an interesting period, and I think Corona has just underlined further some of the trends that we've been seeing in Africa for the last couple of years. Just taking a step back, and if you can look at the landscape in Africa, for a very long time, Africa has been a cashless society, everything being cash-driven. Kenya was a pioneer on the mobile payment space, with M-Pesa coming in place around 2007. Other players have come into the market over the years, Airtel, many other players. But further to say that card still remains as a form of payment, especially in Nigeria. So if you go to Nigeria, you have Valve, which is a leading player in the cards payment. But truth be told, cash still remains king across Africa. Moving to South Africa, I think card is also king in terms of uptake. So Visa, MasterCard, big player in South Africa and Egypt as well. Kenya, to a little extent, you have quite a number of card payments, but not as much as what you'll find in the mobile space. But what Corona has done is actually to accelerate mobile money payments and card payments as well. But looking at East Africa, Kenya, Uganda, Tanzania, I should say that the uptake for mobile money has actually gone a notch higher. And what has necessitated that is also the push by the regulator. So what the regulator did, for example, specifically in Kenya, was to cut down on the transaction fees for any amounts below $10. I mean, in Kenya right now, almost 85% going up of mini transactions are happening on the mobile money space. Looking at West Africa, I think West Africa is playing a catch-up game in terms of the mobile money space. So as I have said, the card rules in West Africa and also in Nigeria, but also the uptake of use of card has gone quite high. MasterCard is doing quite some work, I know, in West Africa, and other card players. So let me say that Corona has been a bad thing in the sense that, of course, there have been deaths. This is a global pandemic, but it's been another blessing in disguise in terms of adoption of technologies that have been pushed for very, very, very long. And I think what we are going to see is that post-Corona, we are going to see a more cashless society. But the interesting thing is, talking of other modes of cashless payments like QR, which is a quick response payment, whereas in China, the uptake is 100%. In Africa, we are not seeing much on the QR space, which is interesting. But my research and the insights I have on the QR space is for you to do QR payments, you need the internet access. And unfortunately, even as much as we have smartphone penetration in Africa, which is high, data penetration is still not that high. I mean, the cost of buying data is still not very high. So what we are seeing is that as much as QR payments are going high in Asia, and also in China, in Africa, the opposite is true. We are not seeing as much of QR payments. So, I mean, in a nutshell, I think with Corona, it's been 100-fold growth for cash payments, with everybody scared to handle cash. And we are going to see this growth just going higher and higher and higher during this pandemic and even post the pandemic.
You're muted, sir.
OLLIE, would you like to touch on that?
Sorry, was that for me?
Yeah, would you like to touch on? Yeah.
Sure. So for us, we're into cross-border payments. So it's about people remitting money to support their families. To pick up on what James was saying there, you know, the COVID has had a dramatic effect. The IMF estimates that global remittance will be down by 20% this year, which is approximately $100 billion less being sent to emerging markets, which is a huge impact. The remittances are a very stable, generally very stable flow of funds. For emerging markets, remittance is worth more than international aid, or it's worth more than foreign direct investment. And it's constant because it's family sending money home for family. So a drop in that is not a good thing. That's kind of accentuated then with a lot of workers being let off and sent home. So UAE and Saudi, for example, are letting off all their oil workers who are now returning home as unemployed people. People who are receiving remittances have less money to spend, so there's less tax intake, and there's capital flight as well with you know, the Europe and the US repatriating their money to keep it safe. So the effects of COVID have been huge. For us, we work in the cash industry, and as James was saying, Africa is certainly moving rapidly towards the cashless economy. But in Europe, there's still a very high percentage of unbanked people, and about half of those are migrants who haven't been able to get bank accounts. So they're still in the cash community. So they're remitting cash. So there was definitely a dramatic drop off in that cash that we've noticed since the start of COVID, mainly because people weren't working and they were getting paid, so they didn't have any money to send home. But we are seeing that picking up considerably now.
Yeah, just to add to what OLLIE and James mentioned, you know, pandemic has changed the way we interact now. Okay, James was talking a lot about the QR code based payments. So QR is just one of the modes of contactless payments. See, because of pandemic, people want to, you know, do the transactions, but without getting in touch with each other. Okay, that's why we will see a rise of contactless payment like QR code based or near field communication payments in Africa as well. So people would like to spend money. Okay, as Olin said, cash is getting dropped, but yes, it is not getting dropped. I would say it is getting transformed into cashless. Okay, people would still like to send the money, but without getting into touch with the agents or merchants or the guys who are actually taking the money. Okay, so I would say that yes, data is a bit expensive in Africa still, but QR code, NFCs, and other modes where customers don't want to get in touch with the agents and merchants and banks, they will still try to use the cashless way of doing the transactions. Okay, so the entire landscape is now going to change. People would, yeah, I won't be saying that spending more because the cash is less in the overall economy. They would be spending, but the modes will change now. They won't be interacting directly with the agents, but would love to do it on internet, would love to do on mobile applications, on web portals, or the other alternative ways in which they can send the money, they can consume the money, they can buy the goods, they can buy the services. But yes, the ways are going to change.
I would think, as well, to just add to that a bit, for a lot of the migrant community, if they're paid in cash because they're unbanked, so they have to get cash into the system. So yes, the designation is cashless, so it's people loading money into e-wallets or loading money into mobile wallets, but the process starts with them being paid cash and then having to get that into the system, whether it's sending with Western Union or the likes of Pipit.
Yeah, so the financial inclusion will increase. Today, if you look at the Africa as an economy, the banking penetration is very, very low. The second biggest financial inclusion factor is the mobile money. So I believe that after mobile money and the banks, there will be more and more aggregators coming into the play who will play an important role in transforming the society from cash oriented to cashless. See, ultimately what's going to happen is I believe that whatever amount of the cash is coming in the system, it will have to transform into cashless. Okay, because people are very, very reluctant after COVID, and COVID will be there. I mean, I would say till, I won't say, next few quarters. It's not that it's going to go away in few days. So we have to transform ourselves, okay, to live with the COVID. And once we start living with the COVID, we have to adopt how to do financial transactions within the COVID ecosystem. Okay, so I believe that yes, cashless will be the way forward. And as Ollie, you just mentioned, today it is a cash-oriented society, but slowly it is transforming with more amount of financial inclusion. Even in smaller countries like Djibouti, Eritrea, people are moving towards cashless society. They don't want to go to the shops, and pay cash where they have a risk of the distances. The social distancing is not there, and they are prone to get COVID or other kind of airborne diseases. So they will be transforming themselves into the cashless society ultimately. Yeah, it's a long journey, a big journey, but it will happen sooner or later.
Thanks, and Monaj and Ollie and James, you're free to add to this question. How are peer-to-peer providers innovating within the financial system sector to bank the unbanked?
From the European perspective, I'm based in Ireland, in Galway, in the west of Ireland. I don't see the banks in Europe doing very much at all, to be honest with you. The likes of the neobanks, Revolut and N26, are trying to take up that space by offering bank accounts that can be opened quickly and relatively easily. But they don't offer very much in line of services. They can do a peer-to-peer payment, but you can't get a loan or an overdraft or any other banking services. We are seeing like banks we work with, like Sterling Bank, for example, in Nigeria, and we're working with Tawakal, we're based in East Africa. They're being much more innovative. So are launching this month a new e-wallet called Switch, which they're describing as banking for the unbanked. And they're on a partially commercial, but also partially social impact-based drive to try and get people, especially rural people in Nigeria, banked. So from what I can see, there's been a lot of effort made in African nations, but not in European nations. That's kind of added to by both the Nigerian central banks and Kenyan central bank have recently made it possible for their nationals to open bank accounts remotely. So Nigerian living in the UK can now open a bank account that's in Nigeria much easier than they can open a bank account in the UK. So there's a drive there to get their diaspora banked and financially included.
Okay. just to add to it, see, banks are also transforming their channels. Today, we see a lot of banking transactions in this typical Asia Pacific subcontinent on, mobile application, internet, and same is happening in Africa. But recently, in last few years, the trends have been shifted to social payments. Now, look at the WhatsApp. Now, the banks are launching WhatsApp banking. Okay, so all the transactions that are possible today using mobile application or internet are now available on WhatsApp. So slowly and slowly, I see that banks are also trying to innovate, that people should be using their WhatsApp to do all kind of transaction, or they can use Telegram to do all kind of transactions. So with these multiple channels coming into play, I believe that the peer-to-peer transfer is going to change. Today, it is a more conventional approach where customer deposits some money in a bank account for the receiver. Receiver takes out money in his branch after going to the bank. But that is transforming today. And I believe that with the new channels coming in, WhatsApp, Telegram, or like OLLIE mentioned that, pure neo banking or, branchless banking, where everything is available on the mobile application, even you're opening up a new account, your card management using tokenization, everything is virtual. So that, yes, it is happening in Europe, and sooner or later, it's going to catch up in Africa as well. So I still believe that Africa has a long way to go, but yes, it is slowly transforming. You see the next step that banks are taking. From the conventional banking, they have moved to now agency banking. They are no more opening up any branches. They are just appointing the agents in rural areas to open the accounts. And from there, the next step will be, omni-channel banking. Customer doesn't need to go anywhere. Just sitting in his house, he can do all the transactions. If he has to withdraw money, he can generate the code using a mobile application on his device and can go to the nearest ATM, insert the code, and take out the money. This is the kind of convenience we are talking about with the evolution of peer-to-peer and the banking sector.
Thank you very much, Manoj. James, do you have any?
So I think very good insights. And let me say that prior to the COVID period, there've been quite a big push for what we refer to as digital banking. So this is a phenomenon that has its roots in Asia, more so in Hong Kong and Singapore, and UK as well, and Brazil. And let me say that as far as digital banking is concerned, it's a new way of banking really, where banking is no more a building where customers flock to, but banking becomes a lifestyle that you can do wherever you are. And now what COVID has done is actually to give a bigger push for adoption of digital banking. But unfortunately, Africa still has its own challenges. Without open banking APIs, digital banking becomes a bit of a challenge. But that still doesn't limit opportunities and innovations. So Kenya, Nigeria, and South Africa, I think we are seeing a bit of digital banking opportunities. And when I talk about digital banking, it's not mobile banking, because mobile banking is just a replication of what a traditional bank will do. But what I'm talking about is a branchless virtual bank that anybody can use without visiting a physical branch. So I can give a few case studies. In Nigeria, actually Nigeria is doing quite well as far as digital banking is concerned, with quite a number of players right now operating in Nigeria and actually running on the Android platform. I won't mention names in this webinar, but I can speak of at least 6 players doing quite some serious work in Nigeria. In Kenya, the banks still tend to think of banking as traditional banking, as you know, but the telcos now are moving a notch higher in terms of moving beyond mobile money, and as we know, M-Pesa, if it's M-Pesa. So Safaricom is actually doing quite some innovative stuff. And there's a local bank as well that let me not mention, but they pioneered with a product 3 years ago, and now COVID has given them some traction on the digital banking space. For the company that I'm working with, we like to refer to ourselves as a digital bank. So this is an area that we are also pursuing very aggressively, with Kenya being our pilot and trying to see how we can scale the same across Africa. So, I mean, it's interesting, and COVID is just cementing all this. But what I need to say is that as far as digital banking is concerned, what the clients are looking for is security. I think security is paramount because they want to transact in a secure environment. They are looking for more added value services. So you'll find that customers are looking for insurance, they are looking for a payments hub, they are looking for rewards, they are looking for coupons as well. So an innovative, you go enhancing and adding more products to the menu. I mean, the other things that customers are looking for, it's a very simple onboarding technique, something that you can onboard from anywhere, most definitely from a smartphone. They're also looking for flexible, personalized products. I think the other thing that they're also really looking for is the contactless and the cashless payments capability. And then finally, a very key component that is really coming out is access to quick credit. So it could be a 1-day payday, it could be a 7-day or 30 days. And what I'm talking about here is digital loans. So this is something that I think is really gaining traction in Africa. And during this pandemic and even post-COVID, we're just going to see more innovations around it.
Thank you very much, James. And just to hold you there, you mentioned earlier on, kind of touched a little bit on open banking APIs. Could you probably tell us why are open banking APIs important and who benefits from it?
Yeah, so banking is the whole idea of allowing banks to share information. So you kind of set up one ecosystem where banks can talk to each other, but at the same time, you can publicly expose some of the APIs. Now, Europe is a leader in terms of open APIs within the banking sector. And I think the big benefit is allowing the financial institutions to talk among themselves, but most importantly, the ability to expose data to potential integrators. So not just everybody. I'm not talking about the entire public having access to those APIs, but I'm talking about qualified, vetted partners who can have access to those APIs. So, I mean, with open APIs, it opens a whole new world in terms of how we interact with financial data and the services that banks can offer to the common citizenry. In Africa, open APIs within the banking sector is an alien word. So every bank operates in silo. And the bad thing about that is that data sharing becomes a problem. Fraud becomes a problem as well. Because if I defraud one bank, or if I'm doing funny things in one bank, the other bank will never know until the issue becomes public. But within an API banking platform, I mean, there's a lot of cross-talking. We're able to talk and collaborate amongst each other. So the benefits are numerous. But unfortunately, we still have a long way to go as far as open banking APIs are concerned.
So I can contribute a bit about the APIs. So Equity is just Equity is one of the banks in the country, and they use their API Jenga. So they're trying to make sure like the e-commerce platforms, the people who are moving to their business to digital platforms, they can be able to use these things for payments. But what I think about banks and using these APIs, they are a bit slow and it's not their main business. So they want to act to make them better. So we have some few companies that have these good APIs. These people who are selling things online, they have e-commerce company, they want to make payments. So most of these companies are in Nigeria, where we have another company, Paystack, which their main business to make sure they have integrated all the banks. They have used this API, so any e-commerce company can easily integrate with these APIs. Therefore, instead of thinking of using a certain bank API, you just go to these startups because that's their main business, and that's how banks will be a bit slow unless they acquire these companies for API purposes. I don't think they will ever win in that market.
Thanks very much, John. Very interesting insights from you guys. Open APIs are important because they allow banks to communicate with each other and streamline their products. And John, I want to talk to you on data privacy. And could you tell us what steps can organizations take to design a leveled up data strategy and content management system to ensure that individuals have control over their data?
So in the last few days, we have been working with customers mostly in Europe. And one of the things that if you're working with people in Europe, you must follow the guidelines, which GDPR, General Data Protection Regulations. So even here in Kenya, last year in November, the government released a new act, Data Protection Act 2019, which is supposed to protect the data in the country. And in the last month, the Ministry of ICT here in Kenya said there will be a new post for data commissioner who will be making sure they enforce that data is well used by companies. So how can companies be able to protect their data? So what we do mostly in our company, following the regulation of data protection, of general data protection regulation. So what you're doing is that make sure if you're making a software, make sure the customer can be able to get all his data anytime he requests for it. So the customer can be able to request you to delete all their data if they want. Also, the customer should know how you're using that data in term and condition. So you should in your term and condition, make sure you have somewhere you say how you're using the data, how you're storing the data. If you're sharing this data with other third party like Facebook for marketing and all those things, make sure it's written well in term and condition. Unfortunately, most people don't read term and condition, but all these things are there on how these people are using their data, how they're protecting your data, how a company is ensuring the data is safe and all those things. So that's the first thing to make sure you're following the data protection. Maybe in Kenya, Data Protection Act 2019, or other countries, mostly in Europe, GDPR, which makes sure the customer the customer can be able to control his data. That's the entire thing about GDPR. The customer wants the data and he can be able to control his data and how you're using it. Yes.
Thank you very much, John. Data is one of the world's most valued assets today. And I think giving customers or individuals control over their data is very, very important in today's digital world. And so moving on from here, Monaj, let's talk about biometric payments. How are biometric payment systems different from other forms of payment, and what is the benefit of using a biometric payment system?
Okay. So biometrics today, we heard about the data privacy as well. Now, every user has unique biometric modalities. We all know that, we have different set of fingerprints, different set of retina images, everything. So biometric is one of the most important aspects when it comes to financial security. Today, the conventional modes of doing the transactions are, you put a 4-digit PIN or a 6-digit PIN by authenticating your transaction. If somebody knows that PIN, they can easily hack into your account and misuse it. So what we have seen as a trend is more and more countries are adopting the biometric technologies. Now, how biometrics works is in two phases. Now, once you onboard a customer, be it bank, be it telecom operator, or be it any aggregator, they onboard a customer. While onboarding the customer, you can take the all four kind of modalities for the customer. So when I say four modalities of the customer, it can be fingerprints, it can be retina, it can be your palm, okay, or it can be your face. So these four modalities, while onboarding the customer, can be taken as input. Again, in fingerprints, you can have 442 configuration while onboarding. Retina, you can do both you can take both the eyes as one of the parameters, for onboarding the customer. Now, when the customer's data is available, while doing the transaction, you can choose any of the modalities for verification of the transaction. If you look at Kenya, Kenya has started moving to that direction, that now the financial transactions will be authenticated and verified with one of the biometric modalities. Now the three modalities of I would say fingerprints, retina, and facial are very commonly used. Palm is generally not used for authentication of transaction. It is because it is generally used in the criminal verifications. So the other three modalities can be used for the verification of the transaction, and it's very simple to use. You scan your fingerprint while authentication of the transaction, and if it is approved, your transaction goes through. Now fingerprint is unique to you, so nobody can steal your fingerprint. Okay, so it gives you more safety, more security. Again, while authentication of the transaction at the branch or at the agency, agents for the bank, you can use a single retina scanner or a single thumb scanner. You don't need a full-blown 442 or dual retina readers. So again, biometrics come with a cost. Okay, while onboarding the customers, if you have to register all three modalities, there's a significant amount of cost in acquisition of the devices which can actually store the data. But while authentication of the transactions is pretty simple, the customer can actually take a photograph of himself using a mobile application, and using the facial recognition software, instantly your transaction can be approved or denied. So yes, we are moving into that direction in Africa very fast. Nigeria is moving into that direction. Kenya has already taken the steps in that direction. Ghana is doing it. So all these countries where digital payments are on a rise, this authentication mechanism is going to change from OTP based or a PIN based towards a full biometric authentication.
Thanks very much.
Yeah.
Yeah, can you continue?
So yeah, Osita. So I'm saying that that's a way forward for biometrics. And even if you look at Europe, when we talk of PSD2 guidelines or a GDPR guidelines, the PSD2 says three things. And out of one thing is that you only have, and that is biometric. Okay. So that is very, very important. And while authentication of these transactions, modalities can be used to verify, and no one can steal your identity. To prevent the identity theft, this is very, very important. Yeah.
Thank you very much. Just before we move on to the next, Marwa, you raised your hand earlier. Hello, Marwa. You're muted. Is your mic okay? We still cannot hear you. It's probably a settings issue. Okay, so we'll just come back to Marwa when he is back online. And thank you, Monaj, for that insight. I think it's very interesting that you mentioned India, because I read an article sometime where it says India is the leader in biometric payments adoption. And it's very, very interesting. Over a billion citizens are all registered. Very, very interesting progress there. And James, what do you have to add to Monad's views?
Yeah, I mean, I totally agree with what Manoj is saying. But I think biometric, it's something that has been there even in Kenya for some time. The uptake has not been as aggressive as we would not expect. But I think with a change of tone in technology, even how mobile phones are now being designed, there's a sudden appreciation of biometric payment. So I think we just need to give it a bit of time, but my projection is I foresee biometric catching up faster than QR payments within the Africa space. So for security reasons and in compliance with emerging technologies, I think biometric payment is something that is going to experience quite some growth in the coming years.
Thank you very much. Marwa, are you there?
I think there might be a bit further to go on trust for biometric payments as well. I mean, it's interesting we see the COVID-related contact tracing apps being released and people are reluctant to download them because they don't know who has the data, and is it the government that has it, or is it one of the big US tech companies that has your data? You're right in terms of how safe biometrics are, but people are worried, well, who's going to have the scan of their fingerprint or their retinal scan, or where is it going to be reused? And I think there's a ways to go in terms of GDPR and trust and biometrics in payments yet.
Thank you very much, OLLIE. We seem to don't have Marwa. Hello, Marwa. Marwa, if you can hear me, I think you should probably close your Zoom application and restart it. Okay, so we don't have Marwa online. Manoj, can you touch on emerging technologies? Are we going to see any real long-time lasting impact from several of these technologies?
So, I mean, see, innovation is the key to success. So every day new technologies are coming up. And, you know, especially after pandemic, what we have seen, as I mentioned earlier, contactless payments will be in the rise everywhere. It's not just Africa, everywhere across the globe. People would try to maintain social distancing, but the financial activities will go on. Okay. So QR code based payments, NFC based payments, you know, the rise of mobile applications, web portals for doing all kind of transactions. As I mentioned earlier, WhatsApp banking or your social payments, they will be on the rise. Apart from that, what I see is blockchain coming, you know, coming up very aggressively. So today what you do or what we see is every bank is doing their own KYC. It's a lot of effort in doing the KYC for a customer. You need address proof, you need identity proof, you might need biometric data. So what I see as a trend is that, you know, blockchain based centralized KYC is coming up very fast. So there will be a consortium of banks or mandated by, you know, central banks where 5 or 7 banks will come together. They will start sharing the data about their customers on a private cloud using blockchain. Okay, so once a customer has been, you know, authenticated for a KYC, other banks can actually share the data on per transaction basis, and customer can actually authenticate this data. So if I opened a bank account in bank A and tomorrow I'm going to open a bank account in bank B, I don't need to do the KYC again. I just authorize bank B to take my data from bank A or from the consortium available in the public ledger using DLT. So that is second thing which is coming up very, very fast, and that will reduce the cost of banking, and on per transaction basis, these things will work. The third important thing which is coming up fast is RPAs. We see that a lot of robotic process automation is happening because certain tasks are, done in a similar way, similar fashion throughout the day. These are being replaced with RPAs very, very fast, where monotonous tasks are being, automated using RPA tools, and there's a less use of manual intervention in that. And the last part I see coming up very fast is about the quantum computing. See, today banks are analyzing the consumer data, consumer behavior using conventional technologies. But with the advent of quantum and these, high power, high resource computing technologies, they can analyze the consumer behavior in within minutes. Okay, what kind of patterns are there? And using AI and ML algorithms, they can actually pitch the right kind of product for their customers. If my 6 months financial data, demographic data is available with a bank, they exactly know what kind of services I am using, when there is money in my account, how this money I am using. So they can actually fine tune their offers and everything using AI, ML technologies and tailor it for me. That is going to change the way the gamut is working today. Today, I don't get any notifications, which are generic in natures from my 5 or 7 banks where I have account. I get tailored notification. I have been using this. So in the first 7 days of my getting the salary, my account balance is high. So they will try to pitch me certain products like buy an insurance, invest in mutual funds, depending on my consumer behavior. So what I see, these are some of the technologies that are changing the landscape, that are changing how the consumer interacts with the banks. And these are the things that will rise.
Thanks, Manoj. Let's see if Marwa can hear us now. Hello, Marwa. Marwa, you can hear you. Hello. Hello. So there seems to be something wrong with your settings or something. I'm not sure. Okay. Manoj, I'm on you now. Just one more question before if we don't have Marwa online, then we can take the questions from the audience, and then we take the closing comment from the speakers. So just one more question there for you, Manoj. And other than in today's world, technology has become part of our daily lives, like you mentioned, from smartphones, we send SMSs, we pay, mobile payment, and to PCs, thanks to PCs, otherwise the spread of COVID-19 could have been very much worse than what it is today, because people wouldn't have the opportunity to sit at home and do their work. And so, and there are several other technologies like 3G, AI, IoT, and blockchain, like you mentioned. But other than being a metaphoric emerging into prominent stake, how can these technologies be incorporated into practical productivity application? And what I'm trying to say here is we have so many technologies that for over 10 to 15 years are still in the emerging space. For instance, gene therapy, and I'm not sure, I might be wrong, but also 3G, which has recently come under, should I say, under pressure for being the cause of the COVID-19. In fact, states such as the United States is seeing 3G as security threats. So, I mean, can you give us your thoughts on how these technologies going to play out in the near future, and what are the likely circumstances that will hinder their development? Is it regulation, funding, is it public interest?
See, as I said, the technology is the heart of everything. It is changing the landscape everywhere, including Africa. Now, this pandemic has brought us, into a very, very different era altogether. Today, we have not gone office for last 4 months. Everyone is working. The productivity levels are same. Still, we are working from home with the technology only. Today, you can have any kind of webinars, the online sessions, online meetings. So the collaboration has changed the entire spectrum. Today, we are still able to collaborate with these technologies only. Now look at the banks, look at the regulators. Okay, they are still functioning at 20%, 30% of with the staff, but they are able to give you 100% of their outcome. How is it possible without the use of technology? So technology, yes, is the centerpiece and it is driving everything. Now we touched upon AI, ML, and predictive technologies. Today, what has happened is the consumer behavior is changing. Okay, and depending on the consumer behavior, be it banks, be it financial regulators, everyone has to change their method of serving the customers. Today, with the predictive algorithms, the banks or any kind of the service providers can actually see what their consumers are doing, how they are doing, when they are doing, and accordingly they fine tune their offerings, they fine tune their interaction points, they fine tune their channels. Same way, regulators are using the technology to keep a tab on the banks. Okay, how they are, using the funds. What is the amount of risk exposure based on the predictive algorithm? They are also trying to see, okay, this was the quarterly exposure for a certain bank. They are trying to predict what will be the exposure for next 3 quarters. So the technology is still driving the regulators as well, and regulators are coming up with the new and innovative ideas. For example, sandbox. The sandbox is one of the things where regulators are trying to innovate plus control as well. They are inviting fintechs, they are inviting banks to test these use cases within the sandbox framework. And if it's good for the society, if it makes sense, then they are going to make it live available for the public. So in a controlled environment, they are trying to innovate as well. So because of these technologies only, the regulators are trying to, fine tune their way of handling the customers, fine tune their way of handling the enterprises and banks.
Thanks, Manoj. Thank you very much. Hello, Marwa, are you there? Okay, so we don't have Marwa, unfortunately. So we're just gonna take the Q&A, the questions from the audience. So turning now to the audience, if you have any questions, we'd like you to identify so that we'll give you the opportunity to ask your questions. Hello, audience. Do you have questions? Okay, so we don't have questions from the audience. We'll just move on and take a closing comment from the speakers on the topics we have discussed. Ollie, would you like to start?
Sure. So closing comments from me. I mean, like I said, we're in cross-border payments, and the advancing technology can only make these easier. I think for us as a social impact company, the sustainable development goal of the UN is to get remittances or international transfers down to 3% cost, and the current global average is 6.6%. So there's a long way to go yet. There's still a lot of fees, which we think will be much better off on the ground where the money's been sent rather than being taken up by corporate entities. So thank you very much for the invitation to join this panel. It's been a very interesting discussion. But for me, the big takeaway is yes, a lot of progress we made with technology, but we need to progress further in terms of social impact that technology is making.
Thank you very much. And James?
Yeah, thank you for the opportunity to present today. But I just wanted to add something in terms of the emerging technologies. I think even besides talking about the new and the cool stuff, I think we also need to talk about what we currently have and how we are seeing a change around what's currently there. So social media, I think we are seeing that transforming more from being conversational to transactional, and more so within the payment space. For example, we are now seeing the ability of integrating payments within social media platforms. Our mobile space, we are seeing a shift from voice now to data, with voice being a commodity. Analytics, data is now becoming a commonly accepted currency. Then we have cloud. Just a few years ago, a lot of institutions in Africa will not have accepted the use of cloud as a hosting platform. That has changed now. So I just thought I should emphasize that. That will go a long way towards supporting the digital banking and the payments new initiatives across the world.
Thanks very much. And John?
So I think in the next few years, we are going to see a lot of customer-centric banks, as Manoj is talking about. So predictive analytics, that's our main work, making sure I don't get generic notification at the end of the day. So in the last few days, we have been getting a lot of data and trying to make sure that these bank customers are getting the right notification, they are getting the right products. We have studied their consumer behaviors even outside the bank and what they're doing. That's also making sure data is protected and all those things, and customer are aware of how their data is being used. So we're going, also there are a lot of data issues in the coming years. The other thing I've seen is mostly the APIs. I think bank should be using their APIs, because most of the developers, the people who integrate these APIs to products, have no idea these banks whether have APIs or not. And there have been startups coming up. Startups are the ones which are coming up with the APIs, they integrate with these banks, and they win a lot of many businesses around. So banks should fully innovate on that particular area.
Thank you very much. Before we move on, just quickly one question here. And I think OLLIE or Manoj or James, you can touch on that. It says beyond the transaction, how do we drive a value shift to customer-centric innovation with payments pace setters? OLLIE, would you like to touch on that, or Manoj?
I would think it's like James has mentioned before, a few of the other speakers mentioned before, is that it's moving towards social payments, so that it is totally customer centric, that your payment is on your device with whatever platform you're using. So the WhatsApp example is good, and I think it also reflects maybe the trust issue we touched on earlier on, that people seem happy to use payments via WhatsApp, powered by MasterCard, I think. But WhatsApp is owned by Facebook. When Facebook wanted to release Libra, the whole world revolted against it. Governments, people, individuals, everybody. So it's about getting payments as convenient and as cheap and as fast as possible for people on the devices, on the platforms they're used to using. But it's about it being a trustable source.
Thank you very much. Manoj, would you like to touch on that?
I agree with OLLIE on this thing that, trust issues are very, very important. And he gave a right example of, Facebook and Libra. Okay. So this is how it's going to change. But still, people are using WhatsApp, Google Pay, or the other modes of the faster payments and convenient payment. So speed and convenience is basically driving the customer-centric approach, where all the entities which are in the ecosystem, including bank, FIs, operators, they want to utilize and monetize the customers, offerings or services that they provide to customers. So yes, convenience, speed, and these are some of the factors which will actually drive the consumers, towards typical service providers. Now, on the closing side, I would just like to add few things that, these kind of discussions are very, very healthy. And we see a rise of, numerous technologies and innovations, which is actually helping and changing the landscape of payments. We all know that, banks or the other bigger financial entities, which have been in existence for last 150 years, are under a lot of threat from telecom operators or the fintech companies. Okay. But yes, they are all trying to do their best to adjust with the changing landscape, and with the innovation and technology. It's no more a competition. It's mainly a collaboration. Okay, you cannot exist standalone. You have to collaborate with others to survive in the market. Now, banks alone cannot survive. They have to collaborate with fintechs and operators. Only FIs cannot survive. They have to collaborate with other entities. So it's all about collaboration that is going to happen at the end. And whosoever has a better collaboration with the other entities will survive in the end. And the technology will be the centerpiece of this entire collaboration gamut. That's it.
Thank you, Manoj. I see Marwa, it's indicating that he's online now. Hello, Manoj. Marwa.
Hi, how are you? Can you hear me now?
Yes, very good. Lucky to have you.
I'm so sorry. I've just had these connection issues.
I see. Okay.
Yeah. Just to add on what Manoj was talking about in terms of AI and machine learning, we will see a lot of AI, especially on the application side, where we have conversational AI in the banks. Like it's already been experienced in Singapore, in one of the big banks, where you're talking to an AI bot. You're not talking to a teller, but it's the experience and the customer experience is so good that you would actually not tell the difference between the bot or a bank teller. And also when it comes to security issues, when you're talking about payment services, you will appreciate that there's gonna be a lot of AI applications in terms of recommendation systems from payment platforms. So there's gonna be a lot of AI and machine learning, and also going into quantum and deep learning. So that's where the world is headed to. And again, we are now, COVID has represented what we are seeing as a data economy. So everything's gonna go data. When you look at the connectivity would essentially be cloud-based connectivity rather than a brick and mortar. So we will see a shift from a brick and mortar connectivity to a cloud-based connectivity, and all this is data. So and also there's AI which is falling on the wrong hands. So a lot of scammers right now would do fraudulent activities on payment platforms, and at this point in time, they would actually call you disguising as government officials with the information about COVID. So there's quite a lot of analytics also that we are looking at. I think John talked about analytics. So there's also a full shift into big data analytics in terms of payments as well. So I confirm what Manoj is talking about, especially when you're looking at quantum. I'm doing a paper at the moment on quantum on payments, and it's good things that are coming in the payment platform ecosystem.
Thank you, Marwa. It's good to finally have you talk to us. And so just to get your view again on emerging technologies, are we going to see a real impact from these technologies, like the way the technologies of the first and second industrial revolution have changed our lives, and what are the likely impacts or hindrances that are possible during these innovations?
Yeah, the impact, we will actually experience a great impact in terms of a positive impact. And what the hindrances, I would, at this point in time, especially in the Africa scenario, especially the Kenyan scenario, we are bound to get a lot of hitches in terms of data protection. Because, you know, in Kenya, data, in as much as we have the act that was passed in Parliament, data protection is in Kenya is not so entrenched, and there's no what I would call corporate ethics in terms of companies handling data. So we are bound to get hiccups in terms of data protection. Because everything now, in another 10 years, we will be operating on a more data environment than ever. So we are bound to run into problems in terms of data protection. Unlike in Europe, Europe has very strong GDPR guidelines which they follow, and if they don't follow, you're fined, and the fines are very heavy. Like I know just before the COVID started, there was a very heavy fine on one of the big networks in Italy, and Britain also. In the UK, companies have been fined, mobile operators. So the impact will be a lot, but there's a whole lot of regulation that needs to be done in terms of corporate responsibility and the corporate strategy internally first, before you can even get to the external markets.
Thank you very much, MARWA. It's a pleasure to have you speak with us and all the speakers. Just before we let you go, just to inform you again that on the 10th of July, which is 2 days from now, the organizer, the host of this event, will be organizing a startup pitch competition where up to over 30 startups will compete to pitch online to a panel of judges, and the top 5 will get selected. So hopefully you will get the email invitation soon. And that's it. I want to thank you again for joining us today.
Thank you so much. I really appreciate it.
Thank you very much, and thanks to the audience also for joining us. I would like now to leave the panel for the host to give us a concluding statement, if possible. Hello, Atif.
Thank you all. Thank you for your participation and making this session exciting. And once again, we have a very good session. Thank you everyone for joining once again. And as Osita mentioned, we do have very exciting session on 10th, where we will have some live, pitch competition, where we will allow some startups to pitch live during the webinar. So we expect everyone to join also and make it once again, exciting. Thank you once again to all the panelists for joining this session. Have a great day. Bye-bye.
Thank you.
Thank you, guys. Bye-bye.
Thank you, guys.
Thank you.